Chapter 2. Reporting intercorporate investments and consolidation of wholly owned subsidiaries with no differential. We're going to start the chapter with a review of investments. We covered a lot of this in Intermediate Accounting 2, so the first part will be a review which most of you should remember. Investments are classified on the balance sheet according to when they're due. If they're due within less than 12 months, they're called a current asset. Anything longer than that, we show it as a long-term asset, and it's on the investment section of the balance sheet. Investments are various types of securities that we have, and there are two broad categories. The first is debt securities, which are bonds. The other is equity securities, which another word for equity securities is stock. How do we account for these securities? Well, it depends on the level of ownership that one has as to how we account for them. So that level of ownership is based on the percentage that we own. If you own 1 to 20%, we use the cost method of accounting, and we're said to not have much influence on the decisions of management. If we own 21 to 50%, we use what's referred to as the equity method of accounting, and we're said to have significant influence. That is, we can control the board of directors, who in turn controls managers, and have them do things that we would like to see them do. We covered the equity method of accounting a little bit in Intermediate 2. We're going to go into greater detail and add a few things that we didn't cover there as we do consolidation accounting. The last is when you have 51% all the way to 100% ownership. Then we use consolidation accounting. We're said to have control if that's the case. So if we look at our number line, again, 1 share to 20%, we use the cost method of accounting. 21 to 50%, the equity method of accounting, and 51 to 100% consolidation accounting. Let's look at an example of cost method of accounting. We purchased 300,000 shares of Facebook stock. After we purchase, we own 15% of the outstanding stock. Well, we own less than 20%, so we're going to use the cost method of accounting. To record our initial investment, we're going to debit investment Facebook, 300,000, credit cash, 300,000. We now have an asset in the investments category of $300,000. How do we record dividends that we receive under the cost method of accounting? The reason I'm mentioning this is that under the equity method of accounting and consolidated accounting, we handle a little different. So let's see how we handle dividends under the cost method. We debit dividends receivable and credit dividend income. In this instance, they declared $85,000 in dividends, and we own 15% of Facebook. That's $12,750. The good thing for us is that we're not going to cover the cost method of accounting, sometimes referred to as fair value accounting, in this class. You covered that in Intermediate 2. I know that you remember it, so we're not going to review it anymore.